Welcome back, investors, to Ticker Time News. I'm Adam, and today President Biden announced that he will cancel $10,000 of federal student loan debt for certain borrowers making less than $125,000 per year or less than $250,000 per year for a married couple filing jointly. This promptly lifted SoFi off higher by 10%, actually over 10% intraday today, because SoFi finances student loans. And if SoFi is guaranteed that $10,000 per student loan that they have out there, that would obviously help their balance sheet. But when the understanding that before borrowers can get that $10K relief, the White House is extending the pause on federal student loan payments through the end of this year. So that brought SoFi back down. It was up 4.5% instead of up over 10% for the day, and it's up over 2.1% here in the after hours. Now, I'm sure SoFi could potentially tick up a little bit higher as the news starts to spread a little bit further. But the options market, the bulls are going crazy with call options for SoFi. SoFi had triple its intraday average of call options across the tape. The most popular call option is the August 26th date at a $7 strike price. So a lot of options investors think SoFi can get to $7 a share. The second most popular strike price was $6.50 for the same weekly close. So we got somewhere between where we are now, about $6.50 and $7 as an area that the options market thinks SoFi can go. Now, another thing that could cause SoFi to just pop off is a short squeeze. SoFi still has many short positions open, with about 18% at last check of its available float being shorted. So there could be some inner workings here in the market that could cause SoFi to jump higher drastically. So be on the lookout for SoFi. Okay, now I want to move on to a question. In our investor community, we send out numerous trade setups and we use many different, as a matter of fact, we use today 16 different trading strategies and the tickers that go with those 16 different strategies to trade. And we send those out many times throughout the week. So I got the question, how do we pull this list together and how do we come up with the tickers for each of these strategies? So I thought I'd answer this question, and the answer is both simple and a little complicated. So I'll try to use the most simplest form here possible. So first off, FinViz, okay? A very popular website. It's got a great screener. TradingView does have a screener too. So I like using that sometimes just real quick. But FinViz seems to be more detail oriented. At least I like it better than using TradingView for doing screeners and looking for different strategies quickly too. So we've got a paid membership to FinViz, and using the screener, let's say, for example, you want to trade stocks that are bouncing off of their 20-day moving average, their 20-day simple moving average. Now, this is one of the strategies and groups of stocks that we shared with our investor community just today, and again, several times throughout the week. So in FinViz, when you go to the screener tab at the top, it is the third option to the left. Once that screen loads, you have all of these option bars here that you can choose from. So let's say, for example, we want the companies in the S&P 500 that are within 1% of their 200-day moving, back up a zero, 20-day simple moving average. So for index, we would select S&P 500. You can go in it by sector if you want to, but keeping this super simple. Select the S&P 500 for the index, and then there are these bars down here: overview, valuation, financial, ownership, etc. Click on the technical, and then you'll have a new screen pop up. So right now in the S&P 500, without doing any other searches, there's 503 tickers in this group. Now, I said I want the ones that are within 1% of their 20-day moving average. So right here on this bar, SMA20, if you tap it, it can either give you the furthest away on the positive side to the furthest away on the negative side. Line them up so that they are in numerical order, and then you just scroll down until you get to the ones that are closest to the 1%. So we have CSX right here, which is a railroad stock, and right underneath there, it's 1.03% away on the upside, on the plus side of its 20-day simple moving average. And if you just highlight the ticker, a chart will pop up, and you can kind of see and look real quick for any type of chart patterns that you are specifically looking for. Maybe we want something that's flagging. Maybe we want a symmetrical triangle. Maybe we want an ascending triangle. Whatever, head and shoulders, cup and handle, it doesn't matter. Whatever trading strategy that you want to use along with this strategy of trading a stock that is within 1% of its 20-day moving average on the upside, the plus side of it, so that way it's potentially then bouncing off of that 20-day moving average. There you go. Now we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, call it 9 stocks in this category right now who are in the S&P 500, who are within 1% on the plus side, the upside of their 20-day simple moving average. And you can just go through the charts just like this, looking for a certain setup that, maybe you like to trade. And, just going through this, you can see that one is kind of moving sideways there. That's the Dow. We got NEE, which is making, looks like they're making a flagging pattern there. We've got HON, which is Honeywell International. They pulled back hard. There's a gap down there, and now they're kind of holding flat. I bet they're right on their weekly expected move. GD here took a hard fall, so maybe that one's not the best, but at least it did bounce off that 20-day. And then ICE, International Exchange, again, a hard pull down. CSX, the very first one that we showed you, it also had 2 gap downs, and I bet it came down to its weekly expected move, and it's kind of holding there, but it is flagging, which is bullish. So this would be an interesting one, CSX Corporation, to maybe set up a trade on or watch it closely. Throw it into your watch list of trade ideas, and there you go. So this is how we come up with the ticker symbols on all of the, for today, for example, the trade setups list that we sent out today based on the 1% off of its 20-day simple moving average. FinViz is the place that we go to get the ticker symbols, to break it down into those different strategies. And you have a ton of choices to really narrow down on what you're looking for. Okay, I would like to add one other thing. If you would like to use FinViz, there is a link in the description of this video to FinViz. Click on it. It'll take you there, and you can give it a spin. See if it's for you. It should be, quite frankly. If you're trading, FinViz is a great tool for traders. I just have to put that out there. You can also get instant access to our trade setups and everything else that comes along with that by clicking the first link in the description. So take advantage of both of those links. I think you'll really like it. Okay, let's move on to today in the market. I'm going to put the SPX up here for the S&P 500. Today was a green day for the majority of the all the indices were green. All the S&P 500 sectors were green. The dollar, it's still holding itself up there pretty darn high. We're going to talk about NVIDIA as well. Question for later. Okay, no problem. Question for now is okay too. I do have my NVIDIA in here. Why was SoFi up if Biden extended the... see, I think that's why SoFi was up 10%, and then it pulled back down to the 4.5%, 5% range, is because people saw the news, they got excited, they put those orders in for SoFi, and then they realized, oh, wait, this isn't going to happen until the end of the year. Uh-oh. So that's why I think it sold off from being up over 10%, is because the initial news broke, all emotion trading going into that, sending the stock up over 10%, and then logic kicked in, and some rationale kicked in, and people started to realize, okay, we've got some time on this. Let's just take a step back for a moment. That's why I think SoFi jumped, pulled back, and most likely why it was still even up today, that emotional trade, right? People not digging into and reading the actual story, just paying attention to the headline. I really think that's what was driving it. And then you get that headline shared on stock twits, and then more people come and jump into it without actually reading the story and understanding what's going on, and just, playing emotion on a headline. Fear of missing out is a very strong emotion in the stock market, unfortunately. So that's my belief for why I think SoFi popped, pulled back, still remains up, still floating up in the after hours. And maybe tomorrow it all comes back down, maybe. Or maybe the news still is spreading somewhat, and people are thinking, oh, I don't want to miss out on this, and maybe it goes up a little bit more tomorrow because of that. So those are all, I think, pretty valid options for why SoFi popped today, when really nothing's going to happen anytime soon. Okay, hopefully that helped to clarify that on SoFi. I still believe SoFi is a great company long term, whether or not student loans are at least 10K for single people, and maybe up to 20K for married people filing jointly. It would be a big cash influx for SoFi if that does actually occur. So, it's the government. Who knows how long it's going to actually take. So just a couple things. But I do think SoFi is set up good for the long term. I still believe that. Okay, today's trade was positive. There was a positive bias, even though we really didn't go anywhere. We retraced what we lost yesterday for the most part, maybe a little bit more. But we're still right at the bottom of the weekly expected move for most cases. And since we're there, people are comfortable. Okay, we already did it. We reached this point on Monday. There's no reason to put any big money on the line here. We're there. We met our objective on day one of getting to that weekly expected move. So this market could literally just hang out here until Friday. Maybe there could be some headline stuff tomorrow that could change things up a little bit. But from this point right here, really the only big move that I could see from here is if there was... Oh, and this reminds me of something. Friday, I made I need to make a correction on what I said the past couple of days. The meeting coming up on Friday, the Jackson Hole meeting that Fed Powell is speaking at. I made a mistake. I made a goof. I'm sorry I didn't catch it. I do apologize for this mistake that I made. But the link that I sent out for Jerome Powell's speech for the Jackson Hole meeting, it was a 2021 speech. So it was from last year. And I do want to apologize. I thought that was currently the draft for Jerome Powell and what he would say this Friday. So knowing that, it actually helps to make a little more sense to why the market kind of freaked out on Monday when they realized, oh no, the Fed chair is going to speak on Friday. What's he going to say? Is he going to be overly hawkish, overly dovish, or stay neutral to where he is right now? So I do want to make that correction, and I apologize for that mistake. That's on me. And hopefully I pay a little bit more attention to the dates next time. So again, I apologize for that. And thank you for pointing that out. One of our investors on Patreon, you guys are awesome. Thank you for pointing that out for me. Otherwise, I would have still missed it, that it was from last year's speech. All right. So today, no worries. Oh, thank you. I appreciate that. Okay. Today in the market, again, with everything just kind of like hanging out here at the bottom end of the weekly expected move, there's no reason for anybody to do anything. The market's just going to play here unless Jerome Powell makes a bold statement on Friday. That's the only thing that's going to shake this market up at this point in time. And quite frankly, I think that if this market does start to move, the aggressive move that it could make would be to the downside and not the upside. The reason for that is, look at it like this. When we are in a rally, right? Buying pressures more buying. And then more buying pressures more buying. And then you have FOMO kicking in, the fear of missing out. And then those investors jump in. The same thing happens when you're moving down. You have selling, more selling. If you have selling, there's even more selling and more selling. And it just becomes quicker and quicker and quicker. And there's always the mantra out there in the market that the market goes up in steps, but falls on elevators or in an elevator, straight down, nearly straight down, faster than going up, it'll go down. So if there is selling that occurs because of Friday's meeting, then the people who are playing in the options game, they are going to start to cover. And what's that going to do? That's going to pressure more selling. And then they'll cover even more. And that'll pressure even more selling. So if we get negative news on Friday, this market could fall fast. And when I say fast, I'm looking back here at, this time frame right here. These 3-4 days of falling that we had all the way down until we hit that new low for the year, for 2022. That's the type of selling that I think we could see if there's negative, if Jerome Powell is overly hawkish on Friday. Otherwise, if he is overly dovish, I think we could get back up to the 20-day moving average, which is for the S&P 500, that is sitting at 41.81 right now. So about a 41-point move. not too big. I mean, it made a 12-point move today, up 0.3%, but that's the type of move I think we could see if it was to the upside. I don't think the upside move could be as big as the potential downside news if the news is negative. Now, right now, let me open this up to the 15-minute chart, and we'll look at this. Let me click one quick button here, and then we'll go through the indices here. I mean, look at this. The past 3 days, it has just literally been sitting right on that weekly expected move on the bottom side. And like I mentioned yesterday and the day before, the market is comfortable right here. Here I am using different tools again. The market is comfortable right here. You know, it met its weekly objective, and that's it. It can hold out here. Jerome Powell is, I think, the biggest obstacle in the market's way that would cause it to get off this balance that they're sitting on right now. Picture them on a balance beam. That's where we're at right now. So, okay. That's Jerome Powell. Let's go and look at the SPY real quick, and we're going to see the same thing. There is one other thing, and I'll use the SPY here to point that out. If we do happen to get dovish news on Friday, which I don't think we're going to get, there is this big gap that was created on Monday, and all gaps get filled. And it's a huge gap. I mean, look at this sucker. Let me get the box out here to really give you a visual. I mean, I think it's like at least a third of the weekly expected move. That's how big the gap is right there that was made on on Monday. And then there's a smaller little gap that was made on last Friday. So we've got a couple of gaps here now. And the gap that was created on Monday, it falls right in line with this other gap over here. Now, this has a very technical phrase or wording for this. Let me just line this other gap up right here. Okay, so we've got this gap up on the left side right here. That occurred last week, right? Then the market ran up, it reached its resistance, it came down, and then it gapped down. This could be called an island top, right? That's where you have a gap up, you have a few candles going up, and then a few candles coming down, and then you have a gap down, leaving that group of candles on like an island, okay? When it is happening up here, see this group of candles right here, they're like on their own little island. They're separated from all the other candles below the two gaps that occurred, the gap up and then the gap down. And this can be a very bearish signal when it's coming from the top side. The island pattern on the bottom side can be a very bullish symbol because it means that, you know, we're leaving them down there on the bottom and we are going up higher. So it's a very interesting pattern that has occurred here. And you can Google, and the island pattern is what it's called. There's another, I think there's another name for it too. Let's see if I can pull it up here right quick. Now, this is not confirmed an island top just yet, but it could. Let's see, where did I see it? I'm just not. Okay. Anyways, we can Google it if we need to learn more about it. But an island top, island bottom, it's a technical pattern there on the chart that obviously we can use that for a reference point if we would like to. Okay, let's go down to the Qs real quick. They were down, up 0.3% today. Not quite as significant of an island top as like the SPX or the SPY has, but there is a slight one there. It's just not as defined like you would like it to see for it to be considered that island top. So we do have that. Now, it, again, like everything else, is just holding on to the bottom end of the weekly expected move. Not much there. We go to the 15-minute and you'll see the same. It's been flat for 3 days. Since Monday's drop, it has been flat, just hanging right above, using the weekly expected move as its support. Really nothing going on. All right, let me go back to the daily here. Click a button to clear this up, and then I'm going to go to the IWM. Okay, let's see here. Back up, one button. All right, IWM, this is the small caps, the Russell 2000, for example. Same thing, except it's not quite on its weekly expected move, and it does not have that same island topping pattern like the SPY or the SPX has in the S&P 500. But so the 3-day losing streak was struck down today with stocks being up. And remember, Jerome Powell, he's going to be the one that flips the switch either way on Friday when he gives his speech. Now, the dollar, let it load there. It is hanging at this, the second red line from the top. It's hanging there, hanging on by a thread. Yesterday, it did pull back and it cooled off. Today, it hung up there. That's positive if you want the markets to go down, but it's because the correlation has been so far an inverse correlation where when the dollar is strong, the market is weak. So just keep that on the back burner there. Now, we did have rising Treasury yields, rising oil prices today. They acted as a limiting factor in the market. Now, notwithstanding these gains that you see here on the right-hand side of your screen, buying interest was relatively broad-based. Advancers led decliners by a 5-3 margin at the New York Stock Exchange and a 14-9 margin at the NASDAQ. And all 11, like I mentioned earlier, all 11 S&P 500 sectors were green today. Look at that. Beautiful. I scroll down here. One of the subsectors was green. The rest are red. Even semiconductors were briefly red today. But NVDA, which I'll talk about in a moment, could be causing that problem. Now, the range here is 0.04% positive, which was information technology, which is XLK, all the way up to 1.2%, which was energy, ticker symbol XLE. It was up 1.2%. Now, mega cap stocks today, they really didn't do too much, but they did edge ahead of the broader market. And that kind of did help the broader market to come up. Now, growth stocks edged ahead of value stocks today, which is something that you see when we're reaching the top of a market. When we look at the Vanguard Mega Cap Growth ETF, ticker symbol is MGK, it closed up 0.4% versus the 0.3% gain in the S&P 500. So a slight edge ahead with mega caps, but just barely. And then looking at the Russell 3000 Growth Index, it was up 0.5%, and the Russell 3000 Value Index was up 0.3%. So there's how you can correlate and see how the growth stocks did a little bit better today. Now, small caps and mid cap stocks stood out as the Russell 2000, which was up 0.8%, and the S&P Mid Cap 400, which was up 0.5%, they closed ahead of their peers. Now, on an individual based level, we had Nordstrom, which is a retail clothing store. It dropped nearly 20% today. And then we had Intuit, ticker symbol INTU. It's a company I hold. I like Intuit. It was up 3.6% today. They were notable standouts after the company reported quarterly results this morning. Both names beat top line estimates. However, Nordstrom cut its full year guidance while Intuit actually issued a pleasing full year guidance. So that was good. Now, NVDA, let's look at this. NVDA. Can you check NVIDIA? Can you check out? Yes, NVIDIA right now. We're going to talk about NVIDIA. Earnings, not that great. Not that great at all on the earnings front. Let's just pull this up here so we can see the data here for it. It was up 0.24% during regular session. It was down a little bit more than it is now at 4.6% being down. It was worse than that, deeper in the hole, but it has pulled up some. If we're looking at where it is now compared to where it closed up here. And in the after hours, it is down here. That will show up in tomorrow morning's candle when the market opens. Now, NVIDIA. Oh, there we go. Why am I doing that? Let's do this. Let's pull this up a little bit. All right, my buy zone is still there. Anything under $150 a share would be great in my eyes. If we could get down and tag a new low under 140 a share, which I think is possible, October timeframe, maybe. I think that could be a possible deal there. But if we look here at what they did, all right, the 24th, okay, so 51 cents a share. No, this isn't right. This says, why does TradingView say that? TradingView is not accurate right this second. All right, let me pull it up over here on my wire service. Just give me a quick second. TradingView says that they beat by a penny. No, I don't think so. Now, I know revenue was in line, so that could be accurate on revenue, but EPS? Let me just double check. It's not what I thought it was. All right, it's loading. Okay, here we go. All right, EPS. Okay, I mean, a penny different. So who's right? Guess it could be either or. All right, so in my book, NVIDIA missed by a penny. TradingView has them beating by a penny. It's it's what it is, a penny. Revenue in line, yeah, that could be in line for sure. Revenue came in, where are we at here? 6.7 billion, so that's right. Revenues were up 3% year over year, not a real big gain. If we're looking at NVIDIA now, Q3 revenues were below expectations, and that was due to a quarter-over-quarter decline in gaming and professional visualization. I'll talk about that in just a moment. And that's because OEMs are reducing their inventory levels to align with demand. Remember, the Fed is trying to create demand destruction by raising rates. That's what the Fed is doing, and it's slowly working. Inflation obviously if it's a supply side problem, well, the Fed can't really mess with that, but they can mess with demand by raising rates. So we got that. They reported 51 cents of EPS. What did TradingView had 51 cents too? Okay, so it's just a little technical error there by a penny. Let's see here. We talked about revenue, 3% up year over year. Here's the big difference right here. Data center revenue for NVIDIA was up 61% year over year to $3.81 billion. And we have gaming revenue falling by 33% year over year to $2.04 billion. So it's your gaming revenue that is hurting NVIDIA in the short term. Long term, I think NVIDIA is okay. Short term, I think with this earnings report and gaming revenue falling by 33% to just about $2 billion, that's not too great short term for NVIDIA. And then we have another standout, and that's automotive revenue. That grew 45%. The unfortunate thing about that is it's a small portion of NVIDIA's revenue pie at $220 million. So looking at this together, this isn't the greatest quarter. The company issued downside guidance, which you don't want to see. So a lot of the reaction could have been emotion reaction and emotion reaction, just seeing the broadline numbers here. But once you actually dig into it, the future is not that bad. It's just a little pricey right now, and the quarter wasn't as great, right? Those are the two things that are hitting NVIDIA right now. But long term, I think it still looks pretty enticing, especially if we can get the valuation to come down, right? Sub 150, sub 140, that would be great. All right, moving on here with this here. They see Q3 revenue of $5.9 billion plus or minus 2%. So that is less than what they brought in this quarter. So that is negative growth quarter over quarter. Now, the company noted that the gaming and professional visualization revenue are expected to decline quarter over quarter. And again, it's due to reduced inventory levels to align with current levels of demand and prepare NVIDIA's new product generation. So that's not a bad thing. They can work on R&D there for a little bit. Okay, the company expects that decline to be partially offset by quarter over quarter growth in data center and automotive, electric vehicles. That's going to be big for NVIDIA. Last thing here, NVIDIA still has $11.93 billion remaining under its share repurchase authorization, and the company does plan to continue to release those funds to buy up their shares. That's a good thing. $11.93 billion is a lot of money to repurchase shares. And so we've got that. Now, on the call, a couple of notes here that I took. While gaming navigates a significant short-term challenge, NVIDIA on the earnings call seemed to suggest that the long-term fundamentals are okay, are still intact. Now, we talked about this a while ago about all the crypto miners buying rigs to mine Bitcoin, to mine Ethereum, to mine Cardano, whatever the coin is. NVIDIA saw a big influx in buying so people could mine crypto. That now has reversed. And it was the gaming chips, the gaming cards. That's what the crypto miners were buying. That's why gaming is down 33% year over year on revenue. now these crypto miners, they're not finding profits to come as easy anymore. That's how it's been for all of 2022. And they have been putting these rigs on the market to try to sell them. That's flooded the market. That's a reason that NVIDIA's gaming side has been hurt. And in their eyes, they think that will be resolved in the longer term time frame. And I believe so. I think it will. Eventually, the market won't be so flooded. And we'll get to another crypto bull market in the future. A year from now, who knows? 2024 is when the next halving cycle is. So we could see an uptick in people buying crypto rigs again in 2024 and 2025. That's definitely a possibility. Okay, the estimated GeForce sell-through is up over 70% since the pre-pandemic numbers. That's good. Also, let's see here. Professional visualization. Oh no, one more note here about GeForce. GeForce Now registered members now exceed 20 million. That's a lot, and that's growing. That's good. Professional visualization. As macroeconomic headwinds worsened, enterprise demand slowed, and OEM reduced inventory. If we go into a recession, that will continue to worsen. Is this recession going to worsen? My goodness, I'm getting tongue twisted right now. Will the recession worsen? Will we get a full-on recession, not just a paper recession? I believe we will, and I believe December should be about the time frame of when we know for sure. Automotive and data center. I've got two little notes here. Automotive, $11 billion in automotive design win in their pipeline. That's incredible. And they expect this growth to continue. And then on data center, workloads, driving growth include natural language processing, recommendation systems, autonomous vehicle fleet data processing, and of course, cloud graphics. Data center is where it's at for the future of NVIDIA. And it's looking really, really bright. So just a couple notes there on NVIDIA. I think it's looking pretty darn good. All right. For NVIDIA stock, if the market is focused on the long term, I think the market still likes NVIDIA. I don't think that's changed. I do think that maybe investors will see that the valuation for NVIDIA is a bit steep, especially if we are rolling into a recession. We're going into that recession. Oh, excuse me, I'm moving my chair here. I forgot to turn it off. If we're rolling into a recession, then by all means, things will worsen in the short term. But it won't stay that way. Okay? All right. So now, everything else for NVIDIA seems okay. Those were the biggest things that I saw there for NVIDIA. I'll read through the transcript for the earnings call, and so just looking for keywords, I guess I should say. You Control F and you just go find the keyword you're looking for. So I'll read through it thoroughly this evening. Anything that pops out, we'll talk about during tomorrow's live stream. Okay, let's continue moving on. unless you are welcome. Absolutely. Let's continue moving on with NVIDIA. One more thing. Again, I just want to say again one more time for the share price on NVIDIA. I think NVIDIA in the short term, the valuation needs to come down. It really does. If we can get sub 40, then I'm really interested for NVIDIA. But until then, I'll just sit back and wait. Because if the recession does hit, then we'll definitely be able to get in this buy box. And I think getting under the 140 would be a lot easier to achieve if we do get into the recession. And again, I think we'll know by December, we'll have a better idea of how bad things could potentially be for our economy. And then for the stock market as well. Okay, 100% NVIDIA will move AMD in whatever direction it goes. You are 100% correct. Here, let me pull up AMD. Get the cursor back over here. AMD. All right, let's see. Because I didn't look at AMD and how it was. Well, up 0.26%. It's after 8 o'clock Eastern, so we don't have that after hours data anymore. So that's that. Okay. What else did I want to mention here after NVIDIA? Let's look at oil right quick. US OIL, because that is a driver on this market. And you can see it was up again today. It was a volatile session for oil, but it was up 1.1%, $94 a barrel. In the after hours, it's into the $95 a barrel now. This helped to propel the energy sector, XLE, the ticker symbol, up 1.2% and be in first place today on the leaderboard for the 11 S&P 500 sectors. Then we had a hawkish Fed speak, which drove treasuries wild today. It propelled them higher. Minneapolis Fed president, who is a 2023 FOMC voter, so they will not be voting in 2022, said that he thinks the Fed needs to be more diligent. Not diligent. Well, where did I just come up with that word for? Where did it come from? I don't know. Diligent. Vigilant. My gosh, I still said the wrong word. Vigilant. With its tightening efforts. Or the Fed's going to run a risk of inflation expectations becoming unanchored from reality. And that's according to a Wall Street Journal report. Now, the 2-year, let's look at that right quick. The 2-year rose 9 basis points. US 02Y. It rose 9 basis points to 3.37%. Man, right now, it has broken that resistance line. And I'm afraid that this thing could go haywire. Now that it's broken this resistance, if it breaks this high set back here on June 14th, when the market hit its low, and as a matter of fact, let me show you this. I want to pull this up, and I want to show you the 2-year, and I'm going to put the SPX on top of it, which represents the S&P 500. Okay. Almost there. Okay. Let's look at this right here. So the 2-year in the S&P 500, SPX, we have the SPX, the S&P 500 rising, going back to 2019. The 2-year was decreasing. And then we have the big drop off, the COVID drop off right here. The S&P 500 dropped and the 2-year dropped. The 2-year remained flat, right? While the S&P 500 was rising. And then we get to this point right here. The 2-year, the yield starts to take off. And what happens to the S&P 500? It begins to fall. We've got an inverse correlation here, except something interesting has happened. The 2-year, since the June low, the June 14, 15, 16 in there, that low on the market was a high for the 2-year, right? That bottom there, that top there. Since then, the S&P 500 went on a rally. What did the 2-year do? It moved sideways. It did not rally, and it did not sell off. It bounced around, and it moved sideways. Today, we finally had a breakout of that 2-year. The market pulled back, obviously, but that pullback wasn't today. That pullback was mainly Friday and then Monday. So what's going to happen if the 2-year takes off and it runs to 3.5%, 3.7%, 4%? What then? What then is going to happen to the S&P 500 but fall? Okay? So you see that. That's something that we can map and we can watch, just like the S&P 500 and the dollar. Just like we can watch the dollar and gold. Because these things move opposite to one another. Right now, I think one of the best opportunities that we have is in Treasury bonds. The TLT, that's the ticker symbol, TLT. It's the iShares 20-plus year Treasury bond ETF. Look at this thing. Look at where this thing was. March 31st, 2020, up here. July of 2020, August of 2020, up in that area. And since then, since the market, the S&P 500 has been rallying, this thing has been dropping. But then we get to 2022. The bottom of the S&P 500, let me raise this up just a little bit here. Oh, this is interesting. Hang with me here for just a moment. The bottom here on TLT was June 10, okay? And you can see that bottom was hit right here. Now, I do a weekly expected move for TLT that is in the weekly expected move list. We do about 35, 40 different products that we give the weekly expected move out to our investor community on Patreon. Click the first link in the description to get instant access. I think we have got a good potential future here to ride bonds up because they have been stricken down. If the recession kicks in, then we have a really good risk reward here on TLT. So it's one I'm watching. There is no breakout yet. There is nothing to say, oh, I need to buy TLT today. There's nothing like that yet. But it is something that I'm monitoring, that I'm watching closely. And I think it has got a potentially, it could be one of the winners over the next 6 to 12 months. So that's what I'm watching for sure. All right, let me just plug the 10-year in here, US 10Y, and then you can see that 10-year as well. right now, as you can see, let me zoom in here a little bit. The 2-year has been rising, so has the 10. It was up 1.9% today. 1.9%. Now, what was today's high? 3.12, and it closed at 3.11. Okay. All right. So, anything else you guys like to talk about? I know I went on a couple of, I don't want to call them rants, but definitely started talking about some things for longer. What? My camera disappeared? Have I been doing all this talking with the camera gone? I didn't even notice it. Okay. My camera. I just realized that the camera was gone. All right. Hopefully your voice didn't disappear. It went away like 10 minutes ago. Oh my gosh. I just went on a rant there about the TLT and didn't even notice that. Okay. Well, all right. Let me see. What else did I want to talk about today? So tomorrow at the open, we got Dollar General and Dollar Tree. That's two companies to pay attention to. When the consumer is penny pinching, that's where they will go shop there. You know, you get things for $1, you get things for $5. The products are, you know, low quality for the most part. Sometimes you can find some cool deals in there, but those are two places that the consumer will go when they are watching what they are spending like a hawk. So watch their earnings out in the morning. Peloton also has their earnings out tomorrow. We'll see how they do. Let's see here. Oh, we get the second estimate for Q2 GDP. I suspect it will stay the same. The expectation is that it will stay the same as the first reading, which is a contraction of 0.9% for the second quarter. So we do get that tomorrow morning. What time? Do I have a time for that written down? 8:30. And then we also get the initial claims and continuing claims tomorrow at 8:32. That could have a small impact on the markets as well. Those two numbers I'm watching more closely than the jobs report, because the jobs report was just a joke when it came out. With all of the companies that you and I know who are laying off and who have stopped hiring, how did 500,000 people find jobs? Well, they're picking up a second job. That's not full employment. That is the consumer having to work harder because things cost more. It's a sad story. Okay, so the estimate for the initial claims is 253,000. The prior reading was 250,000. And yes, my notes are digital now, not just written down on a piece of paper. Continuing claims, the prior reading was 1.437 million. We'll see how that goes. Today, we got the NVDA weekly mortgage application index. That was down another 1.2%. That just keeps on cratering. Excuse me. We get pending home sales tomorrow. I'm sorry, today. It was down 1%. The expectation was, though, for it to be down 3%. So better than expected, but it's still contracting. And the prior reading was negative 8.9%. And then we got the durable orders. It came in flat. 0.0% flat. The expectation was 0.6%. So the takeaway here is that business spending increased a little bit. And that's because of the 0.4% increase in non-defense items. All right. That is everything that I wanted to talk about. Camera is still gone. I'll have to work on that this evening. All right. If there's anything else you want to talk about, let me know in the comments. Otherwise, we can wrap it up here. And I do want to thank you for being here with me. Sorry the camera bugged out. I don't know why that happened. Other than that, if you could, click that like button. That helps out a small channel like this. And if you want to screen for stocks yourself, in the description, there is a link to ThinViz. Click on it, and you can play around with their settings. It is awesome. Okay, just saw that question there. Do you think NVIDIA's dip gets eaten up like last time? Let's go back here to NVIDIA. NVDA, yes, I do. Because people are not, in the short term, okay? In the short term, I think some of NVIDIA is the fact that people don't want to miss out, right? Its bottom was on July 5th. So the market tapped out in the middle of June. But NVIDIA didn't reach that low level until the beginning of July. So maybe there's a little bit of lag time here. Plus, the government and passing the legislation to help the semiconductor industry, that could have delayed or disconnected it from the general market. I think NVIDIA will pull back. I think NVIDIA will get into my buy box again. Remember, NVIDIA was over here when we first started to talk about this buy box of sub 150. And during this time, when NVIDIA did not get into that box, I had comments saying, you missed out, buddy. But it eventually did get down in here. It didn't stay long. We have 1, 2, 3 sessions where it was in here, sub 150. I think it will get back down in here again. I do. I don't know the exact timing on that. I could speculate, like anybody else could, that middle to end of October, because I think the midterm elections are going to shake this market up. It will not shake this market up as bad as the presidential election, because if you remember, in 2020, October was a horrible month in 2020. Let's use NVIDIA here. I'm going to go back to, maybe NVIDIA is not the best one to use, quite frankly. But look at this. Let's go back and find this. Gotta go back a little bit further. I mean, look at how long NVIDIA was down. I mean, this is a good example right here. Look at how quick NVIDIA ran up. I mean, it hit this intraday peak on November 22nd, 2021, and it's been falling since. So when you look at this trend, yeah, there was a nice reversal there, but there was a reversal right here too for it to just continue on down. So you always have this possibility. But 2020, let's Let's see if NVIDIA is a good demonstration or if I just need to go to the S&P 500. Yeah, NVIDIA is a horrible here at it, because for NVIDIA, right here, I mean, it wasn't a big move for NVIDIA, but this was, let's see, this was the beginning of October, and this was the end of October. So it rallied through September, the little bit into October, and then sold off in the end of October, leading up to the presidential election, and then it spiked right after the presidential election, but then just didn't move anywhere. So if I go back to the S&P 500, so the weekly expected move, it uses an equation to come up with the weekly expected move. You have to use the options chain, and when you do some fill in an equation, you can come up with the weekly expected move. Okay, so real quick, this is the top right here, this top. That was the 1st of September. We had it fall to the middle of September, and then September, the middle of September to the middle of October, we rallied. The end of October, we came back down, and we really had this double bottom here. And then it wasn't until November 2nd that a strong reversal occurred, and then the nice bull march on. So I don't think that the midterms will have such a harsh effect on the market like the presidential one did here, right? But yeah, this is going to it's going to affect the markets this October. And again, this is my target right here. 32.75. I think we can get there, especially if the market wakes up to the realization that the Fed will not pivot, and that the Fed going from a 75 basis point rate hike to a 50 basis point rate hike, that is not the Fed pivoting. And September, the QT, quantitative tightening, the Fed offloading items from their balance sheet, sucking money out of the market, that's going to affect the market even more, causing the market to go down. So there is plenty of evidence-based facts out there that we can use to say things don't look good going forward. And the market, it front-runned a Fed pivot. That's not going to happen. It will not happen in September. As a matter of fact, if we go to the I always type that in wrong. If we go look at the Fed Watch tool to see what the rate hike probability is, okay? The last time I showed this to you, on the left side over here, all right? This is the 50 basis point probability of a rate hike. The right side bar, that is the probability of a 75 basis point rate hike. The last time I showed you this, the probability of a 50 basis point rate hike was much higher. It was taller than the 75 basis point rate hike, and now they've switched. Now, more investors, more market participants think that we're going to get a 75 basis point rate hike in September and not just a 50 basis point rate hike in September. Look down here at the bottom. 1 week ago, 1 week ago, a 50 basis point rate hike was 60%. A 75 basis point rate hike was at 40%. They literally have swapped places, because now it's a 40% probability of a 50 basis point rate hike and a 60% probability of a 75 basis point rate hike. So the Fed is not going to pivot, and the market has got to wake up to reality and see that. Maybe Jerome Powell on Friday in his speech will wake this market up from the fantasy that it is in. Now, with that said, that's not to say the market cannot bounce from here. It can. Okay? Also, to dive in a little bit more on the weekly expected move and the equation, you use Friday's closing numbers, and those get plugged into the equation, and that gives you the following week's expected move. There are many different equations out there that you can use. Some of them may be a little bit more accurate than others. But yeah, it's an equation, and you use the closing numbers from Friday. You can also do that for earnings expected moves. You can do that for quarterly expected move, monthly expected move, and so forth. So, but you have to use, if you want a monthly expected move, you got to use the last day of the previous month to get the next month's, and same thing with the quarterly expected move. All right, ladies and gentlemen. Well, I greatly appreciate your time here. I hope I didn't miss any questions in the chat here. Tomorrow, I suspect it's going to be another pretty flat and boring day, unless there is a headline that moves this market. Friday is the big day, with Fed Chair Powell giving his speech, and what will he say? I'm sure he will probably be a little more hawkish than some market participants believe. But I think he's already been hawkish in what he's been saying. He's been telling us what he's going to do. The problem is the market doesn't want to believe it. The market thinks that we got beat up enough in the first half of 2022, and the Fed's always got our back. The Fed will be there for us, but the Fed will not be there for us this time. I don't think so. Definitely not yet. All right, ladies and gentlemen, thank you, sir. I appreciate it. Let me just do this, and we'll leave on this note. Make sure to click that like button for me. Share this video with a friend. And if you like this perspective, you want more, like weekly expected moves on 35, 40 different products. If you want numerous trade setups using different trading strategies, make sure to click the first link in the description. And if you want to come up with your own stocks to trade around, use FinViz. Click the link in the description to FinViz, charting, TradingView. There's a link in the description for all of it. Thank you, ladies and gentlemen, for joining me today. I greatly appreciate it, and I'll see you tomorrow after the markets have closed.